Hey, Think Realty, thanks so much for joining us today on the podcast. Whether you're viewing or listening, we are so excited you're here. My name is Eddie Wilson, the founder of Think Realty. I founded this in 2013 as a third-generation real estate investor. What I gained around the kitchen table, I wanted to make sure I brought into the general marketplace. So I do that by constantly bringing in my friends, all the people that I do deals with, relationships I have to make sure that you have good, clear education and pathways to make money in real estate. Before I jump into our guests, I want to say a quick thank you to our podcast sponsor, which is CV3 Financial Services. When you're taking on a new real estate investment project, having a trusted lender is key. Count on CV3 for your fix and flip, rental, cash out, or rate and term refi needs. Visit cv3financial.com/think realty. That's cv3financial.com/think realty. Our guest today is no stranger to our platform. He is both with me on Think Realty stuff and then also our other side, which is the American Association of Private Lenders. It's Sam Kaddah. Thanks, Sam, for joining us on the podcast today.
You're welcome. Glad to be here, guys. And good to see you again, Eddie.
Always good to see you, Sam. So I want to jump in. Most of the listeners and viewers on Think Realty are real estate investors. Obviously, you spend more time on the lending side. Sam has one of the most, kind of predominant lending software systems and platforms in the nation called Liquid Logics. And he is the back end for a ton of private lenders, as well as some institutional guys. And so Sam has a lot of data and a lot of information when it comes to the general overview of the private money space. And so, Sam, I just want to kind of get your sentiment. And let's start off the podcast by just talking about where are we in the marketplace today? What does it look like when it comes to the deployment of private capital into real estate?
It's actually increasing. Surprisingly enough, everybody has a little bit of a cautious sentiment at the beginning of the year, but right now we've seen people settle down and moving forward. To give you an order of magnitude, we were around $6.2 billion in our lending platform a year. We are definitely on track right now to potentially go to 7.4 and even exceed that for the year.
So you've jumped over $1 billion in transactions, or will potentially jump. Wow.
Absolutely. We've seen that. We jumped. What that really translates to over probably around $260 million for the first quarter alone on this. We're seeing a lot of money coming into the market. Now, we're seeing a lot of changes also in that money structure and the hunger for it. And more importantly, I think we're seeing the opportunities increasing, a little bit of AI and a little bit of also market and opportunities to invest in properties that I'll talk about that later.
Okay. So interesting enough, you said that appetite's increasing in certain areas. Where are you seeing increasing appetites at? Is it standard old fix and flip type stuff? Is it new construction? Is it more of a movement into commercial? I mean, where are you seeing the appetites increase?
It's actually interesting a change. So we've seen a little bit of, call it a shrink in the last couple of years of the fix and flip towards rental and investor properties. That pendulum is now swinging back. We've seen an increase a little bit of the fix and flip, and they're back into its normal levels. But also, we're seeing significant growth in ground-up constructions and new constructions. And it's not only at the just one unit level, it's also increasing now to multi-unit and larger deployments. Think about the 320 properties in one subdivision at a time.
Yeah. For the Think Realty listener viewer, just to give you a little bit of history, 2008, the Dodd-Frank Act is passed. By 2009, all regulation comes into the marketplace. And if you're not aware, just brief synopsis is what it did was it began to limit how much liabilities banks could take on. If you go back before that, before the crash, right? Like they're originating the craziest loans from a conventional standpoint. And what happened in 2008, 2009, it created this massive vacuum because Dodd-Frank really limited how much money could go into the marketplace specific to real estate investments and development. And so it created this massive vacuum for private lending. Private lending had this huge surge, 2010, 2013, 2018, and it has been on a tear for a long time. Now, we saw some slowdowns kind of post-COVID, But the reality is, like what Sam's talking about is to me what the new vacuum is, because even though, we saw a Dodd-Frank rewrite, I think in 2013, 2014, that, didn't, it allowed banks to get a little bit more active in what they could lend on. It still is a massive vacuum. And so today, conventional lenders really have a hard time playing in the development space, the new construction space, right? Because they are limited on what liabilities they could take on. So what Sam's talking about here is he's saying there's huge demand for new construction. We know that we're millions of homes underbuilt in the US right now. The demand is higher than the supply. And private lending, to his point, is really the one that's like stepping in to fill this void. Any just commentary on what I said, Sam? I think I always want to make sure I'm bringing the real estate investor along, because it's like I feel like sometimes we talk about terminology in the lending space and they kind of miss like the genesis of it all.
Great point, though. Here's some numbers for you so people could understand the order of magnitude. Around 2.5 years ago, literally just past COVID, there was a vacuum of 4.5 million units that's underdeveloped in this country.
Yeah.
And what we're finding out right now, even now, 3 years later, we're still around 3.2 to 3.5 underdeveloped. So yes, there is a little bit of a bite was taken out of it, but nowhere close to what the population demands and population growth is. The opportunities to invest in that space is still tremendous. And the more money coming into the market, and whether it's coming in from institutions and Wall Street, so to speak, or private lenders coming in, and you're finding out even those institutional investors go into these private lenders to fund them, so you get more money in the market and go invest in it as well.
Yeah,
we see that all the time.
What Sam's talking about here is so important. And as a real estate investor, you may not understand all of this terminology. Back in the day, it was hard money. And what that was a mom and pop. They raised a little bit of money, or they had their own money, and they deployed it into the marketplace. Post kind of Jobs Act and everything that happened, post 2008, the 2008 debacle, the Dodd-Frank Act, institutions started seeing how they could put their money into the marketplace. Well, institutions in a single family kind of concept have a hard time playing on the equity side. Now, they've started to learn that over the past 2 or 3 years, but they've been playing on the debt side. But the way that they do that is through deploying money through these, what used to be this hard money guy, mom and pop. Now it's turned into like these big corporations that are lending both the funds that they control as well as the institutional funds like Sam's talking about. So it used to be like maybe there was a couple $1 billion available for real estate development outside of the conventional space. Today, it's said that there's over $80 billion right now, currently liquid on the marketplace that have come through the institutions that are in the hands of these private lenders to put into the marketplace. And Sam, I actually believe that if we deployed all 80 billion, because of how I'm watching these private equity firms rewrite their documents so that they can play in the real estate space, that there's probably another 80 billion right behind it that could be deployed, right? Like it seems like it's just a never-ending supply of capital.
So to put things in perspective, you're right, and they spend around $2 trillion in the regular conventional market. And
Right.
The return on the conventional market might be few points. The return on maybe 5-6% return for them. The return for them in our market is 7, 8, 9%. And so a significant increase. There is definitely a hunger to bring in more money into this. The lowest number I've heard that there's $164 billion ready to be deployed. And
Wow.
And the largest number I heard is around 600
Wow.
with this. So the more that we can figure out how to process this on the debt side, and the more how we can figure out how to produce quality loan that's secured and rated, and the more money is going to come into the market.
For sure. So let's kind of jump into what you do as a service to the market. Not only do you have the ability to obviously process loans and originate loans, as a platform, you also kind of understand how to find the private deals, how to insert capital into like if you're an investor, how to put money into some of this marketplace. But I also think you kind of understand from a broker standpoint, how much money could be deployed through broker. I feel like you see all sides of it. And so I just kind of want to get your take on that. As a platform and as a technologist, I feel like you have such a cool vantage point for all sides of the equation.
We actually see it from all sides. We see it from the broker perspective. We see it from the investor borrower perspective. We see it from the lender. We see it from the fund perspective as well. So we get this uniqueness. And one of the things that we are actually seeing a little bit of a hunger for, because of growing investor community, there is a need to have good deals in the market. So being able to see all these dynamics and applying a little bit of AI plus off-market listings. One of the things that we're working on, and we just signed a couple of agreements coming up, is to bring in off-market listings, and they're in the tone of 50, 60,000 of those in every couple of months. And this also applying some AI analytics into existing markets and creating your private ecosystem where all these investors can come in and leverage technology, being able to understand what the borrower, investor, and broker needs are, present them with deals that they can then take it, shop it, and go into our lender community and get it funded at the same time. We're seeing all of these dynamics changing quite a bit now.
Yeah, and I like that you're on the forefront of it. Let me ask you another question, because to me, anytime that there's new or large capital moving into any space, it seems to be a hotbed for fraud and issues where security risks exist, right? So as you're navigating this and money's kind of flowing different channels and different directions now, how are you, are you going down the pathway of blockchain? Are you really instituting any new technologies to try to help securitize the process, or at least create a secure process for all sides of the equation?
So it's actually multifaceted. If you ask me, in the last 3 weeks, this is what I spend all my time on specifically. It's a multifaceted issue. And one of them is to actually bring in quality investors. That means that we need to make sure that we know what their assets are. There's no room for fraud within your statement. You are who you say you are. And when bringing technologies like Plaid immediately for these lenders to qualify, and that puts you in a stronger position as an investor to say, here's who I am, and this is the size I can qualify for, so we can actually know what your assets are, we know what your potential is, and be able to invest. That's one side. The other side of the equations is the tokenization of the entire blockchain. So what that really means is you tokenize the loan, and then you tokenize the property, and now you have a vehicle for in the future coming up where you can actually invest in that token and be able to just, if you want to be a passive investor, you can just buy components of this, or come in as a private lender or a private investor and invest in these loans, just like the big guys do. The big guys are looking to throw somebody this morning I was talking to from private funds, throw in 77,000 loans into our block. And there. So that was our morning. This is my morning routine these days.
77,000 properties.
77,000 properties to be tokenized. With this. So you can imagine the order of magnitude where the hunger from all the big players out in the market where they want to come into this space. And what we're trying to do is we can qualify and create a trusted environment for an investor coming into them. And we can definitely tokenize and secure that property investment. There's a little room for fraud when you are on the chain. So that's kind of happening
real time
off the press. I'm not sure I was supposed to talk about it to that level of details, but I kept everyone anonymous. So we're good.
It's just me and a couple thousand of my friends, right? Just watching in on this. So yeah, don't worry about it.
No worries.
That's awesome. Funny. No, I love that. And so, my mind races on all the possibilities there. And I know you and I have had these conversations in back rooms for 2 years now about all that is coming into the space. But I think, obviously the genesis was you needed to get good, clean loans, good, clean data, right? Because then you can tokenize it, right? Then in the tokenization, what's interesting is like while the institution can come in and play at a big level, what's fascinating is the investor could potentially play at a fractional level, right? And that's the great part about tokenization is like you don't have to fund an entire loan. You might only have $25,000 to invest, or $50,000 or $100,000. And on a $400,000 loan, from a tokenization standpoint, it can be fractionalized, which is really fascinating because now it allows more of the retail investor to play alongside the institutional investor and earn the same yield, which is really exciting.
Absolutely. And even think about it from a different perspective. You can fractionalize and invest, let's say, in between, you could be a limited investor, a fractional investor, and maybe there's 10,000 of you out there, and you invested in 3,000 loans. And once that investment happens, there's a great possibility the institutional investor want to just pay you a premium for your token.
Right.
And just buy it out of you even before it matures. You can put it online and just get it out. And now all of a sudden you got in, 3 months later you got out, and you made some money without even having to worry about the return in your investment, and you're stuck with this money not liquid. And that's probably the most powerful item out of this.
I heard somebody describe it this way, that the tokenization of loans will be the new bank tape. It'll be the new notes platform, right? Like where instead of buying notes, you're buying essentially tokens, the tokenization of these assets, these physical assets, which gives you a ton of security. What I love about it is the security, not just like what you're talking about from blockchain perspective, but also the diversification. Because if you think about it, if you took your $500,000 or $1 million, and in that you got to play with all these people, 10,000 other people or 100,000, however many people it is, and you took down 3,000 loans. Not only diversified in your money, you're also diversified against 3,000 assets, right? So like if one asset fails, it's 1/3,000th of a percent, right? Like you literally get to this place where there's massive diversification, extreme safety here. And to me, it's backed by one of the greatest assets in the world, real estate, right? Like one of the most secure assets that you can get. So this isn't backed by a stock market. It's not some, coin that you found on Coinbase. These are real assets that are tied to the tokenization. I love it. And I love that, you and I, we have such fascinating conversations about this. Anything else you want to share on that? I mean, I know we might get you in trouble by sharing too much, but anything else you want to let us in on?
I think I better stay quiet, but I can tell you that there might be here some close by SEC filings in there coming up.
Yeah, that's great.
And they're it's really a multi-billion-dollar endeavor.
Yep, I love it, and I think that it's warranted. And now we're moving into that model where it's not just ethereal; it's tried and true. And I know your son Alex has played a big part in that as well. Alex, Sam's son, is a budding technologist in all things AI, and just a super smart young man that I know is carrying on that legacy. Sam, I appreciate your time as always. Appreciate Liquid Logics and what you do in the marketplace. Thanks for the data share today. How can they find you or follow you online?
And you can always find us at liquidlogics.com. Read a little bit about us. And of course, you can follow me on LinkedIn. That's probably the most active area that I participate personally in. And if you have any personal questions, advice, thoughts that you want some support with, drop me a line over there and be more than happy to respond and support your growth.
Yeah, that's what I love. Sam is extremely accessible he's built this massive organization, but is so accessible. He's been accessible to me. I know he'll be accessible to you. If you have any questions, I definitely hit him up on LinkedIn. If you have kind of you want some of the backstory, or maybe you're a potential investor in what we talked about, maybe you'd go ahead and tell Sam like, hey, I'm interested. Let's talk about it. But anyways, thanks, Sam. I appreciate your time on the podcast today. Appreciate all that you do for the industry.
Thank you so much. I appreciate the opportunity as well.
Yep. Have a great day. Want to say a quick thank you again to our podcast sponsor, which is CV3 Financial. When you're taking on a new real estate investment project, having a trusted lender is key. Count on CV3 for your fix and flip, rental, cash out, or rate and term refi needs. Visit cv3financial.com/think realty, cv3financial.com/think realty. Before I jump off the podcast today, I want to make sure that you're aware of something coming up on July 31st. It's something that my team has been working on for a little while now. And we've been asked to come back to all the markets we used to go to all the time. We used to go to Baltimore, D.C., Long Beach, California, Dallas, Texas, Houston. And we really only picked 2 cities that we go to physically. This year we chose Phoenix and Orlando. But this year, we're also putting on a virtual summit called the REI Summit on July 31st. And the reason we're doing that is because during an election cycle, it's one of the greatest opportunities as a real estate investor to invest. Did you know in the last 4 election cycles, interest rates have dropped? I don't know if they'll drop this time, but are you ready for it? Did you know that typically during real estate or during election cycles, people sit on their hands? They want to know what's going to happen. Did you know that legislation rarely affects real estate, right? So what are you going to do to prepare for this election cycle? The virtual summit coming up on July 31st is a great way to find out, make a plan, and don't miss out on the opportunity. The tickets are only $24. We'd love to have you. I believe that thousands of people around the nation will come as a part of this. And so we can come to your local market by way of virtual. And maybe we can even get Sam Kaddah on there to give us some more information. But also, if you are not a part of our Think Realty Plus program, it's only $14.99 a month. You would actually get the virtual summit for free, tickets to the shows for free, magazine for free, everything we have to offer, $14.99 or $14.99 a month. You should definitely take advantage of that. And you can go to thinkrealty.com/summit 2024 and use the code LAUNCH. Use the code LAUNCH to get your discounts there. And I am excited about that. Excited to see you on July 31st. It'll be a great time. I'll be there. We've got a lot of guests coming. And I appreciate everything you're doing today. Thanks so much for being a part of the Think Realty podcast. Make sure you share it, like it, comment on it. Let us know what you want more of. And go pick up the latest Think Realty magazine on the shelves of Barnes & Noble. Have a great day.